So you can see here we have the trend lines here. We have a resistance line to the top side and support line to the downside there. Price is in the mid-range here. There's no kind of clear direction. This is higher risk. This is what we want to stay away from. All right. But when price does come close to the trend lines, you can see here we are clearly in an uptrend. This is where we have opportunities. And this is where we can job the market. We have a clear uptrend. We probably have some fundamentals on the back of that. And then we can see here, let me get the pen out just a moment here. Okay. We can see here that when price comes down to the trend line and price comes down close again here, you're looking to get in, looking to take a few points out up here. You're looking to get back in maybe down here, looking to get out up here. You're looking to get in here and then get out back in at the top of the range here. Okay, so you can see here that your risk to reward levels are not very good. It's going to be down here below the trend line, and you're looking to gain a few points and then get out. Okay, you can see another opportunities here down at the trend lines here. Now this is an hour chart. Okay, and bankers basically look at the daily and the hourly chart. They're not drilling down to smaller time frames. And you can see again a couple opportunities here to get in and then get out up here. Now, where this changes with the technicals is when the support line turns into a resistance. So we see a break here of the support line. Now that turns into resistance. And we're looking for opportunities to go short. Okay, so back up to the trend line, you're going short, and you're looking to gain a few points, and then you're looking again to go short at these levels up here, and then get out again. Okay, so that's basically what you're looking to do, and you're looking to do this several times a day. Okay, this is something that brings up the point here that we don't really a lot of times it's very difficult to scalp because of the risk reward ratios. Whereas if you kind of sit back and wait for the better opportunity, you can see more points and you can also put on a little more risk because your reward is going to be so much greater. All right, so let's get rid of that and back to the slideshow. Okay, so following the news is very, very important here. This is the key. All right, and this is where we want to look at a bunch of different factors to determine our fundamental direction, and this is what we're going to be leaning on for the whole strategy. The economic news in real time. We have the economic reports coming out like retail sales, CPI. Those give us clear direction if there's good variance between what's expected and what the outcome is. Okay. Then also news in the marketplace and to gauge geopolitical understanding and market sentiment will give us clear direction as well. We also want to take a look at how the other markets are behaving and look at some of the correlations there. Also, take a look at the dollar and how that is behaving in terms of with market correlations. And then again, back to the technicals, and those are our entry points, and that's what we're looking for. All right, that's the plan here. Here's an example of a clear direction from the economic releases. Okay, here we have the UK retail sales data. We can see some very, very clear numbers out from, let me get the pen up again here. Clear numbers here from the month over month. This is what came out. This was expected. We see massive variance. This is an opportunity to go long. We see again here, we see the year over year. Massive variance. This is outside expectations, and what that means is you have opportunities to go long. You are a buyer. Okay, so that's what you're looking for. you're playing it from the long side. Okay, and in the end, though, we need to control the risk. That's what's crucial here, and that's what will make or break the whole strategy. All right, so trading from the side of strength is what allows us to control that risk. We're not trying to job the market from both sides. We're not trying to job the market going long and then turning around and going short. Okay, that's what leads to disaster, because now we basically, our plan is saying we're looking for the fundamentals, and we're looking to the initial position needs to be that from that side that we're most confident with, that gives us that direction, the fundamentals, and also the technicals. Okay, so that way, if we're not looking to put on the risk, so that if we're going long, we don't turn around, take our money, and then go short. Okay, because if we're not trading from the side of strength, potential for losing money is much greater, and that's what we want to avoid. Okay, here's an example, euro dollar. You can see the downward sloping trend line there, a resistance, and price comes back up several times here, and yeah, you can see up here you're looking to get in and take a few points and get out. You can see several examples here. Price comes up for several hours into this area, and you can job the market for several points throughout, and again here, and here. And continue to take your points out. You can see that I mean, this does add up. If you're taking somewhere around 10 points each trade, this can be significant. However, you can also see in this example that if you wait for the good opportunity over here, then you don't have to sit here in front of your screens all day long. Trade the good opportunity, get your points, and get out of the market. Okay, but that's what the strategy is, and we'll take another look at another example here. Yeah, lots of selling opportunities, and then here's the Aussie. We see uptrend, and there's several opportunities there. Very much at the end here. I don't know if you guys can see my arrow. There's several opportunities there to. We see 1, 2, and now 3 bounces off the trend line, and just get long, get some points out of it, wait for it to pull back, get long again, and that's it. You're playing from the long side. Okay. Now this is a very unique example, and this is probably where scalping is most likely the only example that or strategy that you can employ. This is where this some years ago, when the Swiss National Bank initiated the pegging their currency to the euro at 120. Okay, so anytime that basically you're a buyer of euro Swiss, anytime you see opportunity down at the 120 level, you're a buyer and you're getting in, and then you're looking to exit above. Okay, you're not looking to go short up there, because you can see some of those massive spikes. Those are some stop runs and short squeezes there. People just getting annihilated, and you want to avoid those. But you can see if you're a buyer in this example, there's several opportunities to get in and take some cash out of the market. Okay, and this went on for several months. So that's Euro Swiss. Play it from the long side, and the key here is coming back to the capital management and the emotions that scalping involves. Okay,